And the impact on our business so far has been very muted. There's not a lot has really changed. In the long run, or medium term, we can see all sorts of things changing. Some from our own perspective for the better, some clearly for the worse. But we're all watching to see how the trade war unfolds and what it means for the economy in the region. China is central to the economic activity across the Asia, but also the Middle East and African region, which are the markets where we operate. We'll see how it unfolds.
Is the economy in China weak? Is it as weak as some say? We know about the stimulus that's been happening there. What is the state of the Chinese economy?
The Chinese economy is fine. It's growing 6.6%, which obviously by any standard is, on such a large economy, is a lot of growth. Clearly there's some stimulus, so both monetary and fiscal stimulus, and that's been a driver of the difference. And how much does that contribute? Maybe 1%, or maybe 1.5%. So it's still pretty healthy growth. But the pressures are downward, and we know why. Trade is under pressure. Companies are investing less in China. Chinese companies are moving their supply chains out of China into other countries in Asia, and that has an impact.
Can China do enough stimulus to offset the negative effect of any of these tariffs or trade issues that are happening right now? And not only can they do it, can they keep it up? Like, what's the duration of something like that? Is anyone worried about that?
No, I think we're all very worried. China has a lot of ammunition left to go on the stimulus side, both on the monetary and on the fiscal side. You've noticed that the currency's been relatively neutral, so it's weakened from a strong position earlier this year. But you still have currency inflows coming into the country, so the foreign exchange reserves aren't being drawn down. The interest rate levels are perfectly reasonable. There's still a lot of fiscal room, and there's a lot of credit room. Of course, it can't go on forever.
The irony is, with our yields collapsing, that means our treasuries are rising in value, which is a backdoor favor to the Chinese pile of currency reserves.
Yeah, there's some of that, and I think the favor goes the other way, which is that the very large budget deficit in the U.S. is being funded by China.
Right.
What about the Chinese credit market? What do you see there? I know there's been some moves in Huawei bonds.
Yeah.
Beyond that, do you see any kind of cracks?
Absolutely. So China aggressively dealt with their shadow banking system last year, and pretty much extinguished that non-transparent off-balance sheet stuff that obviously plagued the U.S. and other markets 10 years earlier. So China was in much better position going into this latest round of credit stimulus. There are some defaults. It's very small scale in the overall scheme of things, but we know that there's a lot of companies that are under pressure. So the banking system is feeling a little bit of pressure. The capital markets are feeling a bit, but it's not any kind of a crisis as yet.
I want to switch topics, if I may, in the time that we have left. Your bank agreed to pay $1 billion for violating the sanctions against Iran. And I don't think you've commented publicly, at least on this network, about that. What do you have to say about how your bank acted?
Yeah, well, so these are violations that went back to 2010, 11, 12. So virtually all of them happened before 2012. When I joined the bank in 2015, my clear mission was to resolve that issue. And we have. So we put astounding amounts of investment into having much better financial crime controls in the bank. That was recognized by the New York State regulators, by the federal regulators, by the UK regulators. We had to settle up for the previous violations. We did. We moved forward with a clean record now.